Let's invite Aniruddha Naha, the head of equities at PGIM India Mutual Fund, to talk about the market fundamentals and the way forward for our markets. Aniruddha, it's good to have you on the show with us. In many of the funds that you manage, say for instance the PGIM India Flexi Cap, your top holdings is Infosys. You also have L&T Infotech as one of the stocks in your small cap universe. You hold Birla Soft. So you have a significant amount of IT holding in the various mutual funds and portfolios that you manage. We've seen earnings downgrades coming through for the IT stocks. The valuations have gotten reset lower. Most of these stocks like L&T Infotech is down about 38% from its lifetime high levels. Are you going to keep the faith on IT stocks, or have you brought down your holding commensurate with the fall that we've seen? What has been your approach?
Sure. Thank you for having me over here. We've generally been very positive on IT over the last 2 years. I think a correction was due because the Ps had expanded dramatically over the last 2 years. But given the present macro situation where there is so much of uncertainty across a lot of industries, this is one sector where we clearly see visibility of growth, at least for the next 6 to 8 quarters. And yes, margin compressions are there, but I guess the margin compression in this sector is going to be relatively lower than a lot of other sectors where results are going to come out. And hence, from a visibility perspective, earnings visibility perspective, and from a valuations perspective, which have corrected vis-a-vis the top, this will be a sector where we would continue to add on in every correction. We believe this will be one sector where will be a pretty defensive sector, especially where the market sentiments seem to be pretty negative.
Okay, so you will continue to add on in the IT names. Another, bunch of stocks that I'm seeing are from the financials back in your portfolio. So, I want to ask you about the HDFC and HDFC Bank merger that was announced. The stocks have corrected sharply since then. What is your call on this? Do you think that, you should perhaps add more because you're getting them at a lower price as well? And what is your view on the entire financial space also?
Sure. So without naming specifically getting into any single stock, I guess our weightages will reflect our positivity or negativity on a stock. But financials, we've generally been very underweight financials for the last 3 years. It has really helped us in, to that extent. But of late, we have started cutting down our underweight position. Clearly, we see two things happening, which are changing over what we had seen over the last 3 years. About 2 years back, this was a sector which was overowned, overvalued, and it is definitely the most over-leveraged sector. Today, when you look at it, valuations have corrected. They are well capitalized. More importantly, the asset quality issues seem to have settled. So from that perspective, we definitely have turned a lot more positive or constructive on this sector. And from a valuations perspective, we like both the banking sector more than probably the NBFCs. And within the banking sector, we are neutral to whether it is a PSU bank or a public sector bank or a private sector bank.
Aniruddha, coming back to the IT sector, you said that you anticipated the correction because the valuations were far too premium. But your portfolio would have been hit, right, with the 20% fall that we've seen in the Nifty IT index on a year-to-date basis?
Yes, we did take a knock. I mean, we stayed through. That was our conviction. We didn't do too much with our holdings. And in terms of the hit that you're talking about, it is reflected in the performance probably in the last couple of months or the last quarter. But having said that, when we look at it from a perspective of how things will play out over the next 1 year, clearly visibility of earnings across a lot of sectors will get blurred. Raw material pressure across a lot of sectors will have an impact on margins. So this is a sector where we believe earnings growth of 14-15% or even higher will continue with 100-150 bips margin compression. And when I look at it vis-a-vis a lot of other sectors, we're pretty comfortable holding on to this.
Aniruddha, is there any sort of major change that you've put through in your portfolio right now? Any big additions or anything that you've deleted?
Nothing much, actually. Frankly speaking, we just continued to hold on. The only thing that has happened is we've continued to add financials in the fall, and that is something that we believe, again, from a valuations perspective, there is comfort, even in the private sector names, some of the best names out there, and even in the public sector banking names. So The only big change that would have happened in our portfolio, probably sectorally, would be addition of financials into the portfolios.
And any stocks or sectors where you trimmed your holding in the last 1 or 2 months?
Nothing much actually. We've stayed away from consumption generally across the last 3 years. We hold on to that view. We believe that's a sector where you're going to see downtrading happening. There are issues with supply chains, and inflation is definitely going to have an impact on margins. So we just have continued to maintain our underweight positioning there. The other part is on pharma. The pharma has done reasonably well from a defensive perspective. If the markets fall, we will use pharma as a cash, a proxy to cash as of now. And into the fall, we might just take off some weightages from pharma and add on to financials or something, some other sectors or stock-specific names where we feel valuations are very reasonable.
Okay, so I'm looking at your top holdings. I don't think any of the auto names feature in that list. And, right now the recent news flow has been a little bit positive, whether it's the semiconductor shortage abating. There is a lot of this push about the electric vehicle space. And we have seen the stocks also pick up. Do you think the mood in autos is changing? And do you think your view on autos might be changing?
So generally, see, we have been a little cautious on the auto segment. I know the near-term numbers look good. Our only sense is we want to see how the semiconductor issue plays out. That is especially on the EV side, and more so, we would like to see how crude per se plays out. I think clearly with what is happening geopolitically, I don't think crude is going to come off dramatically or cool off in the near term, and that would probably be a detriment to the overall auto industry. And lastly, we've seen the bottom of the interest rate cycles to that extent. That has been positive for the auto and auto ink sector. Incrementally, if you've got interest rates moving up, that would again be a challenge to the demand scenario in auto and auto inks.
Thank you, Aniruddha, for joining us on the show today. Look forward to chatting in the future. I need to get into a break, but as we do that, we leave you with some good news. CNBC TV 18's